Alrighty guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about the top stocks under $25 that could easily double, triple within the next couple of years. Now, all of these stocks are going to be in some of the top growing sectors. So, it's always smart though. Be smart with your money, be diversified, understand risk and reward. But starting off with the very first one here, we have SOFI Technologies, ticker symbol SOFI. You guys can see that this thing is very, very volatile. It went from $10 all the way up to $28, back down to $14, back up to about $25, back down to that $14 mark, and back up to that $25 mark. So looking at it, you can see it has very strong support right near and around this $14 mark. I think the new support's going to be starting to step in near and around this 200 moving average line. But not to mention resistance right now is going to be right at about $24. But SOFI, what is it? Well, this is a fintech stock. So this is the financial technology sector. They have a mobile app that really has a variety of things from crypto investing, stock investing, to loans, to student loan refinances and personal loans, credit cards, debit cards. The company is actually very, very user friendly, and it's definitely geared towards millennials. Now, I honestly like SOFI, the app, better than Robinhood. The reason why I say that is because everything's all rolled in one. You can have a high quality, IRA account. You can have a, crypto account. You can have a growth account. You can have a credit card that has great cash back. You can have your student loans. Everything's all comboed together. The company's been absolutely killing it on the revenue side, and I'm really, really excited to see kind of what happens over the next couple of years. I think this is going to be a solid stock to pick up for under $25. Now, stock number 2 is ticker symbol MAT. You guys can see this one in general is just an absolute powerhouse. Lows here at 13, highs here at about $23. You can see we had this little spike up in here. Right now, this stock is using it as some resistance. So you guys can see it's hit it almost several times. I would classify the 22 mark really as a stronger resistance, just because you can see that wick right in there. You can see a beautiful upward trend, not to mention, guys, major support near and around that 200 moving average line. So if we do get some sell-off, I think it would be smart to definitely load up on shares near and around that price point. Not to mention, guys, this is a very, very stable company. It's not going anywhere anytime soon. Very solid earnings. It could be a little overvalued temporary, but I think if we have that, mindset of 2 to 5 years, I think this is going to be a solid stock. Stock number 3 is Hanes. Now, we all know Hanes underwear, their shirts, all of that stuff. You can see over the past year, the stock has actually done very, very well. Lows here at about $12, highs here at about $22. That's a return of about 83%. But if we didn't, buy low and sell high, we're still looking at a return of about 42%. But if we're looking at the year-to-date return, that is about a 20% return. So it's still pretty decent. But obviously with this one here, the company's growing still. Very, very strong fundamentals. This is going to be definitely one that is more on the value side rather than growth, because you're going to be getting, yes, some great growth, but also you're going to be getting, some dividends, 15 cents every single quarter, which is absolutely fantastic to start, relying on some cash flow here. Now, this is the year-to-date chart, and if we actually look at the 3-year chart, you can see it's a little more volatile, and I really think we'll start seeing some buying pressure start stepping up here, and we can get some buying pressure back up to these highs here. Right now, we did have that previous downward trend. It does look like it's starting to turn around and at least start to consolidate, if not start working its way back up. So this is definitely one to at least keep an eye on. This one, yes, is going to be more of a higher risk, but definitely worth keeping an eye on for sure. Now, the last and final one is Ford. Ford has really done very, very well over the past couple of years. You can see previous, to the lockdowns, Ford was just selling off like crazy, really wasn't doing much, was taking on a lot of debt, really didn't know, what they were doing. And then they announced their new Mustang, their Bronco, the, new truck, the Ford Lightning, and a ton of electric vehicles. And then the stock just took off. It went, from about $4 all the way up to $20. And I remember looking at the stock when it was like $6. And I kept thinking, okay, we're going to need some fundamentals. And they kept growing, kept doing very, very well. And you can even see on the earnings side, it started doing very well, which investors loved that. So obviously it started getting bought up. Ford, in my opinion, is going to be they're going to be competing heavily with Jeep. The reason why I say that is because when you think of like an off-road vehicle to the Jeep Wrangler, everyone just assumes, that the Jeep Wrangler is going to be the top contender. But Ford came out with that new Bronco and they are selling like hotcakes. I definitely think this is going to be a very stable company here within the next couple of years. Growth is very, very well. But, obviously there is some stuff that's going on. The company is, and does have quite a bit of long-term debt that really dilutes the company. But I think if we have that growth set where, we understand that, yes, the stock could fall back down to 15, 14, before we see 23, 26, I think that's a very, very fair fair expectation. So given that, I think a good strategy for this one, and if not all of them, would be dollar cost averaging. Just figure out however much you want to invest and just slowly invest in payments. Invest $100 a week, invest $20 a week, just start investing. And what you're going to do is, whether the stock's going up or down, you're going to be developing average shares. So if the stock continues to go up, you're still going to be making money because the stock's going up. But the beauty of it is when it falls down, just like it did in here and here and here, you're going to be continuing, your investment, and you're going to be averaging down those shares. So once the stock recovers, you make a lot more money. And the last and final thing with Ford is I'm very, very excited. I really hope they re-announce their dividend, because that was an amazing thing they used to have back in the day, and they cut it. And you can see that, could have caused even more sell-off. The reason why is, historically, people are more likely to hold a stock that's paying them cash flow, dividends, So once they cut that, investors were like, all right, the company's already losing money. We're getting locked down. Their chips are, weeks or months out before we can even get them for their new cars. So let's just sell their shares, and they dumped them, and then they've slowly been working their way back up. So I'm super excited to see where Ford is headed, but by far my favorite stock on this is SOFI. I'm super excited to see where it goes. My average share for this is right at about $14.50. So I'm up a little bit. Honestly, my price target for mid next year is going to be hitting and breaking over highs. I think it can do it. We're just going to need some great earnings, and I think this is going to be a solid stock, and all of these are fantastic. So I hope you guys enjoyed it. If you did, hit that like button, subscribe to the channel, and we will see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.